Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. This is portfolio update number 231. And every single Monday morning, what I do is a video showing the stocks I'm going to buy for the week. And what I do is I deposit $250 of my own money into this account. This is my M1 Finance taxable brokerage account. I've named it my Average Joe Dividends portfolio. And we can see here the performance of this portfolio over time. You can see I started it in late 2017 with just looks like $100 or so, a couple $100, and I've been adding to it ever since. You can see there's a huge bump here where I had some equity in a home I no longer own, so I really bumped the portfolio there. But you can see, though, it's pretty much just been going up and up. There's been a few times where there's been a drop, but we can see the peak to trough, though, has been only maybe a couple months, and then we've gone back to all-time highs again. You can see a couple troughs. There's one right here with the tariffs, and then looks like we're in one kind of right now. We can see the portfolio, it was at 321,000, and we've just been kind of dropping a little bit here down to 306, and we're doing a little bit of a recovery. Where we're going, we don't know. We can't control where the market is going to go. I'll show a little graphic here, but there are some things we do have control over, and that's the amount that we deposit. So that's how much we buy. And then if we drip our dividends from our dividend paying stocks, and then also when we get increases from our dividend paying stocks as well. And my investment philosophy, it's not just in this portfolio. This portfolio is about 15% of my current net worth. And the reason I built this back in 2017 was I wanted an income source as well as something that grew in value as well. You can see this portfolio is doing both of those things, but my intention is I don't want to have to sell any of the shares within this portfolio. Eventually, what I'm going to be doing is I'm going to be stopping the deposits, and I'll maybe do just drips only, and then I'll probably stop even dripping the dividends as well and just be drawing the dividends as kind of like a pension once I do retire, and I do intend to early retire. We'll get more into the income that this portfolio generates. We're going to see it go up, of course, because we did some buying today. We have the cash, the $250 plus, that is going to buy more fractional shares of dividend paying companies. So let's go into the activity log here. We're going to see the deposit here. Here's the $250 that was deposited just this morning, and there's 10 buys. And what I do is I'm going to go back to the portfolio tab here. I have auto invest toggled here, and when we auto invest deposits, the dollars are going to go into the underweighted portion of the portfolio. And if you're wondering what's all in this portfolio, I'll leave a link below, and it'll take you to M1. It'll show you all the companies that I'm invested in, and I am able to pick the percentage for each of these different slices that I have. You can see I have 60, 30, and 10, adds up to 100%. You can see we're underweighted here by 0.4%. We're underweighted here by 0.5%. So the new money, chances are, is going to go into the 10 more dividends until it catches up to this part. And then once we get level, it's going to put money into the ETFs. But it'd take a few $1,000s, I would imagine, to get all these up to the 10%, 30%, and then get this one more to where it's not so overweighted. So let's go back to the activity log. And what I do is I pick 5 companies to put $20 into each of those. So where you see $20 even, those are my picks. And of course, what I'm picking is not investment advice. You need to do your own research, because I don't know what your financial position is, and maybe even investing in stocks is maybe not the best thing to do in what stage of life you're at. You could be in debt and have a high interest debt, and if of course I can't tell you what to do, but if I was in that position, I would probably pay off the high interest debt first before even considering to invest. So the ones that are odd and not $20, those are auto invest, so it's trying to get the underweighted positions caught up. But what I'm going to do is I'm going to click on each of these, and we're going to see the fractional shares purchased for each of those, and then we're going to see what the next dividends are going to be for these 10 companies, and then we're going to go over some historicals and just see how this portfolio has been trending as far as what it's worth, the appreciation, as well as the dividends. We'll go back at the older dividends and take a look at how they're going up over time. So without further ado, let's look at the first one. Again, this is Auto Invest, selecting Oracle, and $12.20 of the $150. Remember, I deposited $250 and $100 of it is what I picked. So that $12.20 bought 0.06234 of a share of Oracle. So a small fractional share there of Oracle, but it will increase the next dividend. Kimberly-Clark, which has gotten hammered recently with their acquisition, and $20 buying 0.1916 of a share of Kimberly-Clark there. Next up, American Express. This is part of the Auto Invest. That $31.69 buying 0.09003 of a share of American Express. Then next up, Allstate. We'll see if we can even move the needle on Allstate with this small $1.65 buy. This is Auto Invest buying 0.00772 of a share of Allstate. So a tiny sliver there of Allstate, but it does make a difference though with this tiny buy. Travelers, $29.04. Again, this is Auto Invest buying 0.10064 of a share of Travelers. Then it looks like most of the 150 went into BlackRock, $87.13 buying 0.08604 of a share of BlackRock. Then next up, Fifth Third. This is one of my selections. It's $20. $20 of Fifth Third buying 0.47304 of a share of FitB. Kind of a lesser known regional bank there in Ohio. It's been doing pretty good for me, with good dividend increases as well annually. Next up, Home Depot, $20, and Home Depot's kind of been slumping lately, so I thought I'd pick up a little bit more of Home Depot. $20 buying 0.05871 of a share of Home Depot. I like how this is spreading the money out to 10 different companies, not just buying one or two. And then next up, this is another one of my selections, JP Morgan Chase, $20 buying 0.06756 of a share of JP Morgan. Then last up, McDonald's, $20 buying 0.06491 of a share of McDonald's. I'm going to click in the Holdings tab. We're going to come back here as I'm going to grab this data to paste into my Google Docs spreadsheet, which we're going to jump to, which tracks all the positions in this portfolio. And you can see it's arranged from the largest position, which is SCHD, to the smallest. And really, these are just household names. Nothing really crazy in this portfolio. And the smallest right now is ADP. So we're going to go over to that Google Docs spreadsheet. And we're going to go over here to the dividend portfolio tab. I'm going to scroll up. I'll show you what this shows for the dividend portfolio. It shows other things too, like tracking the dividends over time, my monthly average dividend tracking, and we're going to update that as well. And we're going to close the video out with my total net worth. The M1 data tab, that's where we're going to paste in this information where it shows the number of shares, the average share price I paid, and the cost basis of all my 48 positions. So what this sheet shows, you can see the company, the ticker symbol, the share price is live using the Google Finance function. And then here's the average share price for Broadcom I've paid. And then here's the number of shares. You can see that nice disparity there with my average share price at less than $87, and it's at $370. So that's been a good investment for me. Here's the value if I were to sell it. Here's my cost basis. Here's my gain or loss. That includes dividends. Here's my gain or loss expressed in a percentage. Anything above 25% in green. You can see Broadcom is well in the green. And here's the dividend per share. And they're all quarterly except for the 2 monthly payers here in blue. And I have SCHD in purple because it's a variable. Every single quarter they change it. And Things like Broadcom, it's the same every quarter except for their annual increase. With SCHD, that dividend can go down and it can go up. We don't know where it's going. Usually Q1 is the weakest dividend with SCHD, and usually Q4 is the strongest. Here's the current yield if I were to buy more Broadcom. Here's the yield of my cost. The yield of my cost is so much higher because the share price has gone up so much. Everything on this sheet, it is sorted by the pay date, A to Z. So once Broadcom announces their next dividend, it's likely going to be December 31st. I'll put that new date in there and I'll resort, and it will put Broadcom right over here. And it just repeats the cycle. They pay their dividend, they announce a new dividend, they pay their dividend, they announce their new dividend, and the next thing in the cycle that happens is the next dividend is always higher. It just keeps going up, which is just awesome. That's why I track this, because it's so motivating to see it in action and everything going up over time. Of course, the one thing I can't control is the share price, but I can control the number of shares, again with this graphic where the deposits buying more shares, dripping to buy more shares, and then increases, which increase the dividends. So the only one, again, I can really control are these two levers. This one is a great lever I can control, but the stocks I have been paying generous dividend increases to me, so they've been doing great. And we'll go over to the next dividend. You can see I've put in the next dividend for some of the buys like Fifth Third, Oracle, JP Morgan. Here are the current dividends that I've paid. You can see I have them highlighted for November. We're just expecting one more dividend. So I've received 185.64. You see the sum there. But the next dividend from BST is going to be well over $500. So the big one hits every single month. That BST is just a bomb that hits. What I'm trying to do, though, is I'm not dripping that BST dividend directly back into BST. I'm spreading it back into the portfolio to build up all these other smaller dividends. Same with SCHD. In the third week of December, SCHD should be paying their Q4 dividend. I'm going to spread that. It'll probably be around $1,000. Spread that bomb around to the rest of the portfolio as well. So some of these individual positions will do some more heavy lifting, because BST and SCHD are doing the heavy lifting, with these other ones kind of sprinkled in some smaller dividends from like Costco, not even $5, but there are nice ones like from Verizon, and a decent one here from like AbbVie. So again, these ones in the white where I've typed that out, this is the current dividend, but we're going to see the next one change once I update the sheet. And I think I've captured all of them with the McDonald's, Home Depot, BlackRock, Travelers, Allstate. And Allstate was that tiny. We'll see if that one goes to $8.02. I think I was like $1.67 or something like that. It was really small. And I think American Express was also in there, but they already paid their dividend, and the next dividend's going to be $7.95. So I've written that down. We'll see how much this goes up. And this one's embedded, so I'll go over this one. Hopefully I don't forget it, but it will go up by a few cents here with American Express. We're also going to see the cash flow average. The average monthly dividend is going to go up, as well as the quarterly and annual. It's going to go up over here, and we'll read those off as well. So let's grab that data from M1. Instead of having to type in the new number of shares, average share price, cost basis, I can take that data, copy it from M1, and I've arranged a tab on this Google Docs spreadsheet. What I'm doing is I'm doing VLOOKUPs on that M1 data tab. See the code right there? To pull the average share price, number of shares, and the cost basis. Those are the three VLOOKUPs. So we had 10 buys times 3. It would have been 30 entries into the sheet. Instead of that, I say no way. We're just going to do a pay special, values only, where it aligns the shares, cost basis, and average. And it does a VLOOKUP on these ticker symbols. You can see where it aligns those. We'll see the next one, like Broadcom, then Apple, and so on. It goes all the way down here. See how much data is in here? Right about 624 lines. And then it does the VLOOKUPs to do the rest over here on this page. So I don't have to type it. Just do a copy paste. Then we're going to read off the new dividends. They're not going to go up very much because remember, most of them, well, half of the buys were $20 and some of them are spread around, with BlackRock being the largest, but BlackRock pays a pretty low, it has a pretty low yield. So with Fifth Third, that one, 24.60 old dividend, and it's now going to be 24.79. And then Oracle moving up from 10.14 to 10.17. And then JP Morgan moving from 11.10 to 11.20. If you're wondering why some of these are in the green, I put in a rule in here. Anything $10 or above will be in the green. So you can see like Lowe's, just 45 more cents, and we'll move that one into the green. Let's look at American Express. I think I wrote that down to a $7.95. We've moved it up to $8.02. And hopefully with that 15% dividend increase in March, we'll see if they do that. They did that in 2024. We'll see if American Express is that generous. That's going to push us really close to that $10 mark with American Express. We can see McDonald's moving from $15.85 to $15.97, almost $16 there. Home Depot moving from $10.72 to $10.86. You can see it's baby steps with this, a little at a time. But I'm doing this every single week with the buys. I'm dripping those dividends as well. So it's just constant where I'm getting that next dividend bigger and bigger. BlackRock, here's where the $80+ of the 150 went into, and moving the old dividend from 11.37 to 11.81. Then we'll see hopefully another 2% increase in January, just in a couple months. Hopefully BlackRock is more generous with that. Travelers moving from 6.38 to 6.49. Some of these are stubborn, just trying to move up some of these lower yielders and get those guys up to the $10 mark there. And then Allstate, it was a small buy, moving from 8.01 to 8.02. So even those tiny little buys, I think was Allstate the small one. Let's take a look and see activity log buys. Yeah, even that $1.65, it did make a difference. It moved it by a whole penny. But hey, it's progress. And then hopefully in February, we get another 8% jump here and get Allstate even closer to that $10 mark as well. Then Kimberly-Clark moving from 2043 to 2067. Been really increasing that Kimberly-Clark dividend. Hopefully Kimberly-Clark does another 3% at least in January. Then let's look at the old dividends for the monthly, quarterly, and annual dividends here. And moving from 1,122.36 to 1,122.85. So a small bump there. Then in quarterly, moving from 3,367.09 to 3,368.54. Then the annual, moving from 13,468.38 to 13,474.18. So we're going to take this $1,122.85. This is like a monthly paycheck from this portfolio I can count on, and it's just going to keep going up and up. That's if we have, something like dividend cuts can affect that, but most of these companies in here just pay a steady increase year over year. So hopefully not too many of these cut their dividends. Even if I have a couple that cut their dividends, with the rest of them increasing their dividends year over year, it will more than make up for that. So let's take this amount, the $1,122.85. We're going to put this in the monthly average dividend tracking tab. Anytime I have an event where it's one of these, go back to this fancy graphic where I make a deposit, a drip, or an increase, that's an event that's going to increase the monthly income. And of course, if there's a dividend cut, or if I sell something and I buy something that has a lower dividend yield, that's also going to affect it here too. So I'm not going to try to hide that. There are some cases where there is a dividend decrease, but it's 85. Yep. So 1,122.85. We have the event already in here, the $250 deposit, and what that did was it changed my monthly income by 49 cents, and that's 49 cents every month going on forever, as long as these companies pay their dividend. So just step by step, you can see other things that have raised the dividend and what the other events are: deposits, drips, and then just right here we have the three that the graphic was showing. You can see with Merck, 28 cents with their 4.9% dividend increase. So this is not extra money I even put in. This is just Merck increasing their annual dividend. Same with this. This is just a dividend drip. Of course, a small one. Let's see if we can find a better drip. American Express, small one. Like here, Verizon's dividend drip, 39 cents, which was, pretty close to a $250 deposit. We'll say a $200 deposit just with Verizon's drip there, adding 39 cents. You can see where BST, that bomb hitting, and then JP Morgan, and along with the $250 deposit. But I think a lot of the buys in there were lower yielding companies, which kind of pushed that down. So that's why that happened. But with BST, it's going to be hitting harder, even with a bigger dividend. Usually every single month, I put in a little bit more, even though I don't directly drip BST back into BST. So we're going to close out this video with, actually we have to go to the dividend tracker tab. Then we'll go to the total net worth and close out the video. But you can see here just some historicals I want to show you starting from January 2019. Look at the portfolio value here. I really started slow and small. And this was really extra money I had at the end of the month, kind of like my fun money, where I gave myself a little allowance of $100, $200 a month. And instead of spending it, what I was doing, I was keeping it. And I started selling things that I just had, like video games, or flip some things on Facebook Marketplace. And I was able to increase these deposits. And it wasn't really until right about here I really started kicking in more, right around here. And especially here where I had the equity in the home I no longer own. I started dumping more money in here. And also, since I became single, right around here, June 2022, I really amped this up, because I'm the only one, providing, earning money. So you can see how this has really kicked up, and the portfolio value has kicked up. Of course, we've had a bad month. You can compare where we closed out October, much higher place at 321, and we're at 311. Of course, I'm rounding down. That's why it's a clean $100. So I've rounded down at the end of the last day of each month to close out the month. Here's that 185.64. Remember, I read off of the dividends that have been received so far. Right there. There's that 185.64. And then BST is going to drop in there and really increase these. And hopefully we get a bigger, I know we're going to have a bigger dividend that we had from last year. Should be over 700-ish. We'll see where it's at. I'm going to close it out. But here's that average monthly dividend. We can see how it's gone up over time. You see back, like April 2023, even back here when it was like 146, and just amping that up, and it just keeps going up. And so far in the month of November, we've increased that average monthly dividend. So this is like the monthly paycheck. That's why I look at it as I've increased it by $6.63. So I'm getting $6.63 more every single month because of my efforts of deposits. And before I forget, we're up to an even $1,000 there. But we had a month-over-month gain of 0.59% just in the average monthly dividend from the month of November alone. And here's that annual dividends now up to $13,474. We've increased those annual dividends in November by $79.54. There's the deposit. So we're going to close this video out going over my total net worth. Like I said, the portfolio, that's that line right there, the 311, 624.94. That's about 15% of my total net worth. We'll look at the rest of it, because I know a lot of dividend investors, they get criticized because, and they're right in a lot of aspects. And I don't agree with solely being a dividend investor and just doing that unless you're hyper focused. You're 22 years old, you're starting out, and you just want to get financial independence and nothing more. And you just want to have like a steady income, then maybe you could do that. But I would argue maybe to buy into something like a VTI or like a VU and just do that. And because you're going to have kind of tax drag on you as you go. So I have a little bit of that tax drag with this portfolio. I'm not complaining because I have enough of a gap with my current W-2 job where I can just pay the tax bill. It's really not that much money with that tax drag. So just keep that in mind. And that's why I invest in other things that have growth. That's why I'm kind of going rambling on about that. So at Vanguard, you can see I have an IRA. Mostly it's a traditional or a trad IRA, and most of it is, it's in VYM, VTI, actually most of VTI you can see there, but total, right about 330K. Then here is that dividend portfolio. This is, this is my current employer 401k. It's in a Fidelity S&P 500 index fund. You can see I'm really heavily weighted in index funds. And I know we saw in this portfolio, there's individual positions in here, but you can see the bulk of my net worth is not in that. It's in these indexes. To me, it's more safe. And over at M1, I have an IRA over there, another traditional IRA. You can see the sum is at 781K. It's in more boring indexes of VTI, SCHD, with more, there's a controversial one here in BST, which is a, used as a covered call strategy. But the one knock I have on it, it's a high fee, but it's been doing well. You can compare it to what it's been doing compared to SCHD. It's been outperforming SCHD for years, and it also has high return as far as the dividend. The only thing that's bad about it is the dividend that it pays. Well, the income that it pays is non-qualified. So I just kind of want to point those out there, just if you're going to look into that. But to me, I think the benefits do outweigh the bad things about it. Here is my dividend portfolio here in this line. Then over at M1, I also have, here's my cash. That $250 deposit you saw, that's coming from here. And once I deplete that, we'll see how much I put in as far as deposits. So I'm kind of earmarking this to just be dwindled down. I'm dollar cost averaging into this portfolio every single week at $250. So consistently, that's my plan until this money evaporates. And we'll see what I do after this money evaporates, whether I'll just take the surplus from this, my Capital One checking account, and then this will be my paychecks go into this, and then anything usually above $10,000 will just go over to the Synchrony account right here. And you can see over in Synchrony, I have 3 different accounts. It was just one, but Synchrony kind of forced me to split it out into CDs, or certificate of deposits, because they lowered their interest rate. Not too long ago, they were at 4%. And then I saw they had I believe it was this is a 15-month CD that I bought at 4.25. I knew the interest rates are going to be cut. They already cut them down. I think it was Synchrony's interest rate was at 3.8 at that point. I knew it was going to drop, probably likely to 3.65, 3.5, and we could see another drop. So I wanted to lock that money in. And you can see it was at $50,000 was my initial deposit, but I've had 2 months of interest. You can see it's already up to $50,348.97. I just got a payment on that already, and I think the last payment was scrolled over. Yeah, it was just $177.65. I believe I just received it today because we're on the 24th. So every 24th of the month, so December 24th, January 24th, etc., I'll be receiving this ever building amount. It was 171, 177. You see how it just keeps going up. It's going to compound until its maturity date, and then we'll see what's available for CDs. Maybe I push it back over here, but I have another one that I opened up. I think this is a 9-month CD at 4.1%, because I didn't want to put everything in here at the 15, because I have a tax bill coming up for selling out on the taxable brokerage account to pay off my house. And sorry to go in the weeds on this. I'm just kind of trying to explain things I'm doing and kind of the rationale I'm taking to do that. So again, I haven't paid off the credit card balance over here, which is mostly the second part of my fence, and that's what this extra $3,000 pretty much is. I'll pay that off. It'll be about $10,000, but of course it'll be a little bit more. I get paid on Thursday. It's going to add another $2,700, so I'll be over again. So I'll likely be pushing probably about $2,500 over here in time, probably in a week or two. Here's my other, my liabilities. I have a U.S. bank card. I use this for, I get like, how is it, like 5 or 6% off at Amazon, and then like 3% off Walmart and on purchases. So I use it there. And then here's my 2% cashback card on everything. It has that large balance where I got the fence. So rather than finance things, I'm getting 2% cash back on large purchases. Here's my total net worth. We're down below the 2 million. I was briefly a multi-millionaire there, but total net worth has gone down. But not to worry. It may it could be next week, could be a month, could be a year, 2 years, whatever. We just don't know when those peaks and troughs happen. So we're kind of dropping into a little bit of a trough here. Could be a bigger trough, could be a huge trough before we go back up to new highs. But it will. I have faith in that. I have faith in the United States as a whole, pretty much, because that's what I'm invested in with VTI and VU. Same with SCHD too. So you can see I've done some kind of math calculations, kind of like for retirement. And this one's my average monthly dividend. If I had access to my IRAs, I could just draw the dividends and then interest from savings, and that would be my monthly average paycheck. I could withdraw almost $3,500 and not have to sell a single share of stock or withdraw anything more than the interest from my savings for that. And then I did a dynamic 4%, like using the 4% rule on my total net worth, excluding my home, because you can't count that on a 4% withdrawal, because I can't withdraw from my home. But just on my stocks and cash, I could withdraw this annually safely according to the 4% rule. I keep it dynamic, so every month I could withdraw this, but every month it's going to change. Could go up or down depending on what the market's doing. Same with this as well. So this is just my IRA. My 401k IRA amounts, you can see just that amount. So, but really all I can get to right now without penalty is, let me try to select, I'll show you. It would be this and this. So this would be, I could withdraw the dividends from the taxable brokerage account. This is the interest off of what's left in the M1 savings account. So these are savings accounts, interest here. And those, these are all interest from savings, and then the dividend portfolio for a sum of $1493.31. So I could withdraw that safely, very safely. I could technically withdraw probably 4% from the dividend portfolio, but I'm not going to do that because I would have to sell shares. So this would keep the portfolio shares intact, would not lower my dividend. Actually, my dividend would keep going up because of dividend increases. Remember, I'd still have that last lever, even if I wasn't doing deposits or drips. So that would still be increasing year over year, but I'm really increasing it faster by doing the first two levers. So I just want to show that, I have access to. If something were to happen, I could pay at least $1,493.31 of my expenses. I'll start tying in my current kind of like bare bones budget. And right now I've kind of calculated it's close to about $2,000. So I'd have to come up with another about $500. And I do get a little bit of income from doing surveys as well as YouTube income, but it's not quite there to shore up that about $500. I need about another couple $100 to be like completely financially independent. So I have to increase this, or maybe the interest rates, I don't know. Can't count on those going up. I'm going to have to just save more money to increase those and bolster those. So anyway, that's all I had to show you guys for this video. Sorry to ramble on, and hopefully you guys get something from me kind of talking in detail about the other things about personal finance and my own case as well. So here at the buys again: Oracle, Kimberly-Clark, American Express, Allstate, Travelers, BlackRock. That's where most of it went. Fifth Third, Home Depot, JP Morgan, and McDonald's. So a good selection, kind of all over the place, and increasing all those dividends. So I hope you guys got something from this video. If you did, please click the like button. Also subscribe so you do not miss future videos. My next video will likely be my next Monday buy. So thanks again.